Effective options, recourse, and strategies for saving a home from foreclosure. After missing 5 or more mortgage payments due to loss of income, you're listening to the Business Learning Center podcast at Learnwiki.org. Homeownership represents financial security, stability, and years of hard work for many families. However, an unexpected loss of income due to unemployment, illness, disability, or other financial hardship can quickly place a homeowner at risk of foreclosure. Missing 5 or more mortgage payments is a serious situation, but it does not necessarily mean that losing the home is inevitable. In many cases, lenders, government agencies, and nonprofit organizations offer foreclosure prevention programs designed to help homeowners recover from temporary or even long-term financial hardship. The key to saving a home is acting quickly, communicating with the mortgage servicer, and exploring every available option before the foreclosure process is completed. The first and most important strategy is to contact the mortgage servicer immediately. Many homeowners avoid answering phone calls or opening letters because they fear bad news. Unfortunately, delaying communication often reduces the number of available solutions. Mortgage servicers generally have departments dedicated to loss mitigation, whose purpose is to evaluate borrowers for programs that may prevent foreclosure. Federal guidance encourages servicers to review eligible borrowers for available loss mitigation options before foreclosure proceeds. One of the most common solutions is a mortgage forbearance. Forbearance temporarily reduces or pauses mortgage payments, allowing homeowners time to recover from a loss of income. This option is especially helpful when unemployment or financial hardship is expected to be temporary. However, forbearance does not eliminate the debt. The missed payments must eventually be repaid through a repayment plan, loan modification, or another approved arrangement. Another effective option is a repayment plan. If the homeowner has returned to work or has regained a steady source of income, the mortgage company may allow the overdue payments to be spread over several months while regular monthly payments continue. This approach helps borrowers catch up without making one large lump sum payment. For homeowners whose income has permanently decreased, a loan modification may provide the best long-term solution. A loan modification changes one or more terms of the mortgage, such as extending the repayment period, adjusting the interest rate where permitted, or adding missed payments to the loan balance. The goal is to reduce the monthly payment to an affordable level while allowing the homeowner to remain in the property. Many borrowers who experience job loss, reduced work hours, or permanent income changes may qualify if they can demonstrate an ability to afford the modified payment. Homeowners should also determine whether they qualify for government-backed assistance programs. Depending on the type of mortgage, options may be available through programs associated with federal housing agencies. FHA-insured mortgages, for example, offer several loss mitigation tools, including partial claims, repayment plans, forbearance, and loan modifications designed to help eligible borrowers avoid foreclosure. Seeking assistance from a HUD-approved housing counselor is another highly effective strategy. These counselors provide free or low-cost guidance, help homeowners understand their rights, prepare financial documents, communicate with mortgage servicers, and complete loss mitigation applications. Because they are independent professionals, they can often simplify a process that many borrowers find confusing and overwhelming. If a homeowner's income has completely stopped, developing a realistic financial recovery plan is essential. This may include applying for unemployment benefits, seeking temporary or part-time employment, finding new sources of household income, reducing unnecessary expenses, negotiating payment arrangements with other creditors, and creating a revised monthly budget. Demonstrating responsible financial planning can strengthen a homeowner's application for mortgage assistance because it shows the servicer that the hardship is being addressed. Homeowners should also gather all required financial documentation before applying for assistance. Mortgage companies commonly request recent bank statements, tax returns, proof of income or unemployment benefits, monthly expense information, and a hardship letter explaining why payments were missed and how the homeowner expects the situation to improve. Providing complete and accurate documentation can prevent delays in reviewing the application. Unfortunately, financial hardship often attracts scammers who promise to guarantee that they can stop foreclosure in exchange for large upfront fees. Homeowners should avoid companies that ask for advance payments, instruct them to stop communicating with their lender, or promise unrealistic results. Legitimate assistance is available through mortgage servicers and HUD-approved housing counselors, and homeowners should verify the credentials of anyone offering foreclosure rescue services. If it becomes clear that the homeowner cannot realistically afford the property even after assistance, alternatives to foreclosure may minimize financial damage. These options can include selling the home before foreclosure, negotiating a short sale if the home's value is less than the mortgage balance, or arranging a deed in lieu of foreclosure. Although these options involve leaving the home, they may reduce the long-term impact on the homeowner's credit and financial future compared with a completed foreclosure. In conclusion, missing 5 or more mortgage payments because income has stopped is a serious financial emergency, but it is not necessarily the end of home ownership. By acting promptly, maintaining communication with the mortgage servicer, applying for loss mitigation programs, seeking help from HUD-approved housing counselors, preparing complete financial documentation, and rebuilding household income, many homeowners can successfully avoid foreclosure. The earlier assistance is requested, the greater the likelihood of preserving the home. Even when keeping the home is no longer financially feasible, understanding the available alternatives can help homeowners make informed decisions that protect their financial future and reduce the long-term consequences of hardship.